Let's do a single best chart. This is gorgeous. This is from the Atlanta Fed. It's sticky core. All you need to know on radio is take out food, take out energy, take out shelter, and there has been a massive plunge, the disinflation that Chair Yellen talked about yesterday. David Wu, you said it was a cacophony at the press conference yesterday. Did she get inflation right?
I think, if anything, I don't think she got her goods inflation right, but I do think that she was probably more focused on asset price inflation. I do think that what's happening in tech stocks over the last several months cannot be allowed to continue. And I think if there's any lesson they might have learned from 2006, 2007, is that when volatility collapses to a decade low, when basically you have bubble-like conditions in the financial market, you've got to basically, take the before it basically gets out of hand.
James Sweeney, a Fisher from a different time, not Stan Fisher, said, I think there's somehow a linkage of inflation into interest rates. Is that linkage broken?
No, I don't think so. I mean, we have very low real interest rates, and what's happening in asset prices and tech
stocks.
She
wants real rates higher.
Yeah, and that's, I think, what David just said. We've got some asset prices which are looking a little bit bubbly right now, and I think that low real rates are the reason. And while monetary policy can't be responsive to asset prices day by day, calling peaks and troughs, you can observe that the yields on just about everything in the world have been pushed down to nothing, and that you don't want that. So get short-term real rates up, and I think that's what they're doing. The economy's fine. We don't need sharply negative real rates anymore.
So, David, if you agree with that, and first of all, do you, what does it mean for distortion in the markets?
I think there's no question, I don't tell you, the dollar and the rates have collapsed, okay, in the last 3 months because the markets come to a conclusion there is absolutely the tax reform is dead. The stock market has been through the roof. So there's clearly been a disconnect between the stock market and basically the fixed income market. And I think, what's going to be most interesting over the next 3 or 4 trading days is how is the stock market going to react to the fact that growth is slowing and the Fed sounding extremely hawkish. And I think this is why I think, if NASDAQ started to come off and it's starting to look a bit wobbly after what happened last week, I think that's going to be the big driver of all markets. Think about this. Also commodity prices just basically fell again yesterday. I think the risky assets is going to be really the epicenter of the financial market in the next few days.